Assalamu alaikum wa rahmatullahi wa barakatuh. In the past lectures that we have discussed on the movement of Islamic finance, then we have discussed on the Islamic economic system. Our today topic is Islamic finance. The financial world initially disregarded the concept of interest-free financial system. In fact, they were suspicious of the Islamic financial institution acting as fund mobilizer for international terrorism. However, they have now rationalized the concept, its power, and its value, which evidently has brought a positive outcome to the banking and financial system of the financial world. Islamic banking is now considered as an alternative method of banking which is safer and less at risk to a financial meltdown as experienced by current conventional banking methods. Islamic financial system is based on the principle of Islamic economics and its accordance with the Islamic jurisprudence guided by the Holy Quran. In Islamic financial system, money is financed on the profit and loss basis and the projects are pre-specified. It is essential for the Rabbul Mal, owner of finance, to keep a watch on the utilization of funds that are financed for the specified project or transaction. In conventional system, the timely return of loan with the accrued interest on it is the main objective of the loan, regardless of what type of project they may be financing, be it a school or a brothel house. It is for the reason that Islamic finance houses are also called as the Institute for the Socio-Economic Development. Before we go into the detail of the finance and financing, just let us have a look in the historical background of the subject. In the mid-19th century, the interest element in banking emerged as the main cause behind the failing and financial meltdown that raised from the conventional banking. The movement of Islamic financial system started from Egypt in the late 50s. By the early 60s, it has been adopted by some of the Islamic countries. It was a challenge for Muslim scholars who had been debate and dialogue to persuade the financier on the strong potential of the Islamic financial system as possible alternate method of banking. By the 70s, the acceptance of Islamic banking became a reality in the international capital market. The practice of banking without riba is now standing parallel to the conventional monetary system. A number of specialists have argued that real substitute to interest in the Islamic financial system is mode of profit and loss participation. The participation in the capital fund requirement and the sharing of profit and losses in the pre-agreed ratio creates the financial setup in achieving the socio-economic objectives in the Islamic economy. After the appearance of Islamic banking in Egypt, many other Islamic countries adopted the same principle of banking, such as Pakistan, Iran, Iraq, Sudan, Malaysia, Indonesia, Turkey, Saudi Arabia. The movement has started in Egypt has made the Nasser Social Bank in the city of Midgimir to be the first bank to practice Islamic financial system in the world. With the introduction of an institution based on Islamic finance rather than conventional, several modes of financing were practiced on the line of profit and loss sharing ratio as murabaha, equity financing as musharaka, property financing as ijara, commodity financing as murabaha, and ability financing as mudaraba. Gradually, the branches of financing within the four modes were developed and financing system was cultivated for almost all type of business and commercial activities on purely participation basis. The participation of conventional banks in the interest-free commercial activities is indication that the Islamic financial system has obtained the confidence among the international financial markets. Currently, the conventional banking system controls substantial monetary activities of the world. Based on the rapid annual growth of Islamic banking, the share of global financial activities will gradually decrease after way of the growth of Islamic finance. The growth of Islamic financial system calls for greater effort to develop a worldwide network of modern and efficient financial institutions equipped with new methodologies and extensive range of products and services to coordinate with the working of Islamic banks operating on financial methods. A Jeddah-based International Association of Islamic Bank has opened its office in Cairo and representative office in London. Membership of the International Association of Islamic Bank is open to all the Islamic banks and financial institutions that worked on riba-free basis. It enjoyed the recognition of the Organization of Islamic Conference, OIC, which has given International Association of Islamic Bank a status of observer. The status is accepted by several international organizations. International Association of Islamic Bank is providing technical assistance and expertise to Islamic communities in the establishment of Islamic Bank at national and international level. It also be noted that some British universities are now awarding postgraduate degrees and doctorate in Islamic banking and Islamic economics. The Islamic financial system is based on principle of Islamic economics, and it is in accordance with the Islamic jurisprudence guided by the Holy Quran. The Islamic financial system is based on social objective for the benefit of mankind. In the Islamic financial system, money is financed on the profit and loss basis, and the projects are pre-specified. The Rabbul Mal, owner of the finance, is cautious of how funds are utilized, ensuring that projects funded serve the society and are in accordance to the Sharia. This therefore excludes the usage of funds for non-halal activities such as building of casinos and gambling houses or production of illegitimate goods like alcohol, drinks or cigarettes. It must not deal with interest rate financing as a means of leverage in the capital structure through fixed debt liabilities or generate interest income from the investment securities. In the conventional system, how the funds are utilized is secondary. The primary concern would be whether it is a viable project that would bring income to the financial institution. Timely return of loans with the accrued interest is also one of its primary objectives. It is for the reason that Islamic finance houses are also called as Institute for the Socio-Economic Development, whereas in conventional banking, money is bought and sold as a commodity. The monetary market system and financial practitioners stand to consider interest as the only riba which Islam prohibits. In fact, there are 48 types of riba practices that are prohibited in Islam. These will be mentioned in the next unit, but for now, we list some of them as follows. Application of wrong weight and measures. Non-documented commercial transaction for purpose of fraud. Under-invoice or over-invoice for self-benefit. Bribery and taking advantage of position and status exploitation of the weaker party. Hiding financial information from the state. Fraud and forgery, smuggling. These are all financial transactions which are being prohibited. This is absolutely wrong perception that the loan transaction is taken as financing. Let us now see the difference between financing and lending. This will provide clarity and understanding to the Islamic approach of monetary affairs and present conventional system that practice money as lending. Practically, the financing is defined as financing is an equity and not the liability, whereas lending is a liability and not the participation. In other words, financing is made and loan is given. Financing is an investment and loan is facility. This is because financing cannot be sponsored until it is agreed on profit and loss, and loan cannot be allowed till return is guaranteed. Financing is the use of money which is owned by one who has the surplus fund and used by another who has the ability to use and manage the money by employing his experience, knowledge, and perseverance. Financing demands transparency and accuracy in the usage of the available funds for a specific commercial, economic, and business purpose, and has the potential to increase production, distribution, consumption for a social benefit. Financing develops entrepreneurship and allows employment growth. It is the use of the money for accelerating the economy rather than treating money as a commodity which is bought and sold. In lending, money is afforded without considering the social and economic justification of the purpose. It is a loan against security provided by the borrower. The interest levied on the money offered to the borrower is fixed either in cash or in liquidation by collateral of the asset of the borrower. In financing, money is to participate in equity or in a venture business by offering money or management skill. The financier will become a direct or indirect partner to the venture, and the profit and loss arising in the business will be shared in a pre-agreed ratio. Simply, we can explain financing and lending as lending is liability and not the participation. Financing is made and loan is given. Lending is secured and financing is support. Financing is an investment and loan is a facility. Lending cannot be a financing until it is agreed on profit and loss sharing. Financing cannot be a loan till return is guaranteed. Lending is given at a price of money on application of rate. Financing outcome is a profit and loss shared in an agreed ratio. Lending has to be secured by collateral. Financing is collateralized within its own system. Lending is given against the confirmation of a guarantee. Financing cannot be made until the user is able to use it. Lending leads to the inflation and liquidation. Financing ends at ownership. Financing increases the capital base as well as net worth. Lending increases liability, cost, and decreases the net worth. Financing is an act of money without the concept of liability, collateral, or guarantee. Its origin is investment and its end is ownership. Islam clearly defines what is halal, lawful, and what is haram, forbidden. In all the economic activities, through the definition provide the basis of Muslim to create and make their earning in only activities that result in socio-economic benefit. To further clarify, Islam prohibits all financial, economic, social, and legal activities that are morally, financially, and socially detrimental to the community. Islam acknowledges the individual rights of custodianship of wealth that is legitimately earned and attained. Islam put binding on Muslims to spend and utilize their wealth sensibly and not to hoard, keep idle, or to misuse it. Islam permits the retaining surplus wealth to be used for the well-being of the community. The whole or a part of surplus wealth held to be carefully utilized for the unprivileged section of the society through participation in the form of zakat, donation, aids, or alms. Islam looked to put a stop on the accumulation of wealth in the hands of a few, monopoly, because this can bring harm to the community. Financing is practiced in a system that has an input method mobilizing the fund and output method using the fund. These methods identify the mode of funds under certain principles, which are given below. Any unjustifiable increase of capital, whether in loan or sale, is prohibited. Any fixed or predetermined rate of return tied to maturity and amount of principal that is guaranteed regardless of performance of the instrument is considered as riba. The available surplus fund placed for the financing must have a potential and multiply and grow to gain. The profit is then divided based on the pre-agreed ratio between user of fund and supplier of the fund. it is prudent for both parties to subtract from their share of profit a certain amount to add back to the business as retained profit. Both parties of the financial transaction enter into business at a risk. The financier bears the risk of losing the money invested in the event or of a loss situation. The user takes the risk of reputation, time and effort in managing the business. Therefore, financing in Islam comprised of multiplication, division, subtraction and addition, and all four work toward mitigating the risk element potential in the business. Money as a potential capital, and the Islamic financial system recognize the importance of money, a factor of generating the economic activity. Money should be treated as a bridge between goods and services. It should be recognized as potential capital. It became actual capital only when it joined hand and other resources to undertake a productive activity. Islam recognized the time value of money, but only when it acts as a capital, not when it acts as a potential capital. Hoarding of money is treated as a potential capital, which does not have the means to be multiplied and increase in volume. For any period of the potentiality, its volume remains as it is until it joins hand with man's ability to use it. In Islamic financing, money is linked to a man, and the need of man are linked to the commodity, which identify the shape of the use of the other three factors of production in triangle form and move clockwise by giving potentiality of money as man acquire money, and with money he fulfill his need. Thus, it is correct that money became a capital when it involved the participation of man. Gambling is prohibited in Islam. But what about the speculation? Are these two the same or they are different? Rafiq al-Misri explained that the promoter of speculation differentiate between speculation and gambling on the basis that speculation depends upon information, experience, and study, unlike gambling that leans merely on fortune and coincidence. They believe that the gambler himself creates risk, while the speculator only transfer a risk as he undertake existing ones. But the similarity in speculation as well as in gambling is that only few people gain huge and rapid fortunes, while the majority loses. This goes against the principle of Islam, since the reward gained by the minority are the expense of the majority. Islam prohibits dealing in assets which is yet to be produced. The prohibition strengthens the market at a deal only with the real gain. For example, speculation on commodity are economically harmful because market players tend to speculate commodities that are not yet produced. There is an uncertainty as to whether the commodity will be produced or otherwise. A bad weather may destroy crop and reduce the chance of a bumper harvest. As mentioned by Muhammad Asif, a financial practitioner, prevalent unhealthy investment activities like intraday trading are highly speculative and one plays on the money. There is no concept of earning through participation. It's all about earning through gambling, which is prohibited in Islam. For healthy investment and healthy economy, long-term equity participation is vital and a vantage point for forecasting stable and halal income. Long-term equity participation is important for prolonged and stable growth of our economy. Islamic financial system prohibits transactions that features uncertainties, gambling, and risk. Abu Huraira narrated that the Prophet Muhammad ﷺ said, "A time will come upon the people when one will not care how one gains one's money, legally or illegally." References taken from the Sahih Bukhari. Transparency of contract is an important part of the financial transaction, as Islam upholds contractual obligation and the disclosure of information as a SCAD. These practices are upheld in Islam because they reduce the risk of misinformation and moral hazard. All financial transactions must be written from with a clear transparency of parties involved. the purpose of the contract and the duration among the information must be specified and identified. The execution of contract is detailed in Surah Baqarah. Surah Baqarah, verse 282 of Surah 2. O you believes, when you deal with each other in transaction involving future obligation in a fixed period of time, reduce them in writing. Let a subscribe write down faithfully as between the parties. Let not subscribe refuse to write, as Allah has taught him, so let him write. Let him who invite the liability dictate, but let him fear his Lord, Allah, and not diminish aught of what he owes. If the party liable and mentally deficient or will or unable himself to dictate, let his guardian dictate faithfully and get 2 witnesses out of our own men, and if there are not 2 men, then a man and 2 women, such as you choose for witness, so that if one of them wrong, the other can remind. The witness should not refuse when they are called for evidence. This then not to reduce in writing your contract for a future period, whether it is small or big. It is better in the sight of Allah, not suitable as evidence, and more convenient to prevent doubt among yourself, but it is a transaction which you carry on the spot among yourself. There is not a blame on you if you reduce it not to writing, but take witness whenever you make a commercial contract, and let neither witness nor subscribe suffer harm. If you do such harm, it would be wickedness. And in you, so fear Allah, for it's that teaches you, and Allah is well acquainted with all things. If you are on a journey and cannot find a subscribe, a pledge with possession may serve the purpose. And if one of you deposit a thing on trust with another, but if it be a transaction which you carry on the spot among yourself, there is not blame on you if you reduce is not to be in writing. But take witness whenever you make a commercial contract, and let neither witness nor subscribe suffer harm. If you do such harm, it would be wickedness in you. So fear Allah, for it is Allah that teaches you, and Allah is well acquainted with all things. If you are on a journey and cannot find a subscribe, a pledge with possession may serve the purpose. And if one of you deposit a thing on trust with another, let the trustee faithfully discharge his trust, and let him fear his Lord. Conceal, not evidence. For whoever conceals it, heart is tainted with sin, and Allah knows all what you do. The contract must be written and transparent to all parties involved. It also states the role of the subscriber who draft the contract, which should be in the presence of 2 witnesses, 1 witness representing each party to the transaction. In case of any dispute, the person who drafted the contract can become an arbitrator, as he knew the content and terms and conditions of the contract. The financing contracts start with the wording, in the name of Almighty Allah, who is the most beneficial and merciful, as the first part of the contract. This followed by the acceptance at the close of the transaction with the following word: in the clarity and understanding of the terms and conditions laid down above, I will abide by the terms and conditions in the name of Almighty Allah, who is the most beneficial and merciful. Being a Muslim and believing in the principle of Islam, one cannot appreciate the responsibility taken by the 2 parties of the contract. The guidance are specific in the execution of any Islamic financial transaction as financing prohibit receiving and paying interest. Financing work on Islamic set guidelines consisting of risk sharing, individual rights and duties, property rights, purity of contract, commitments, transparencies, fair deal, and employment growth. Financing is not limited to banking or insurance, but cover capital formation, capital market, and all type of financial settlements. The philosophical root of an Islamic financial system originates from the relation of factor of production and economic activities. The financial system emphasizes on the ethical, moral, social, and religious proportions for enhancing equality and fairness of the society. Financing fully supports the revealed sources of Islamic teaching on issues such as work ethics, wealth distribution, social and economic justice, role of the state, and responsibilities and duties of the citizen. Financing established an absolute prohibition of payment of predetermined and guaranteed rate of return. Financing invalidates the concept of interest in money matters and rule out the use of debt-based instrument for all money matters. Bonds and debentures used and issued in the money market are restricted instruments in the financial system as they guarantee a certain level of return. The financial system encourages risk sharing, promotes entrepreneurship, discourages speculative behavior, and emphasizes the sanctity of the contract. Financing began as equity participation for economic ventures and transactions of specific nature using the input and output method. Financing can only be used for only 4 output methods, whereas the mobilization of fund can be either equity participation or venture financing by way of input method in shape of sukuk, which is a receipt of contribution and participation for money for capitalization of a transaction or of a project. The input developed the output method in 4 modes of financing, and these are mudaraba, ability financing; murabaha, commodity financing; ijara, property financing, which is asset financing; and musharaka, equity or venture financing. Now, financial system need the appraisal before it is being executed. Financial system has a detailed appraisal method, which appraise financial transaction through 12 P, a pre-financing stage. These P lines up with the first as person, the 2 parties of transaction which should be identified. The financier should be mentioned and source of the fund must be ascertained as halal before it can be used to finance the business. The other party, the user or entrepreneur, must have an excellent reputation as well as the ability, experience, knowledge and capability to manage the business. Then comes the purpose of the finance. It has to be determined if the purpose of financing is trading, manufacturing or providing service, as purpose is the foundation that determines the opening of the financial transaction. Project of the transaction for which financing is to be required. Information must be given to the nature of the project or business. Any project that create instability or develop negative indicator for the socio-economic is not eligible for financing. The period for finance to stay as financing. Period for which finances to stay as financing. The duration of the project important as it determines the exact time for which the transaction shall commence and date of completion. The duration must be identified as short, medium and long term. Product. The outcome of the product is very important, as any product that is prohibited in Islam cannot be supported financially. All such products that are obscene, immoral or unhealthy, such as cigarette production, lucky draw, pornography, betting or gambling, blackmailing, or artificial involvement of substance that damage the purity of the product are classified as negative indicator of business ethics, are not eligible for financing. Process to be used for financing. The structure of company has to be ascertained prior to applying for financing. Is the business based on partnership, private limited or a public limited company? Finance can be structured for any 3 methods and it allows the risk to be shared among many financiers as possible as minimize the risk level in the transaction. Then come the price. Price is the measurement of finance required. The approximate net present value of the investment should be calculated before making the funds available, followed by proper budgeting to enable the financier to consolidate the flow of investment that can result in profitability. Then comes the place or location. Where will the finance be utilized? Every business or transaction has a place of location which play a very important part in the assessment of the mode of financing. For example, if a person desires to establish a mango pulp plant at a location where mangoes have to be bought from a very far region, financing is not feasible for this business. Participation, relation and responsibilities of financier and the user are the most important part of the contract. All activities in the transaction have to be executed with an understanding of role and responsibility of the user and the financier. The participation should be taken as a duty for mutual benefit and success. Then come the pact and terms and condition between the parties. Every transaction or project has several variables in performance for smooth operation. These performances are linked to an understanding of the terms and condition of the agreement. This agreement has to be worked out prior to the execution of the financing and its disbursement. The agreement must be in written document. And then we have the professionalism, ability, experience, knowledge and expertise. In the transaction or in a project, it is not possible to have all operation to be undertaken by the partner's company. Company may need to outsource or hire consultant. Whatever is the arrangement, the decision must be mutually agreeable between financier and the entrepreneur. Last one is the perfectness in the operation. The 11P factor, if properly and excellently undertaken, will reduce the risk and ensure smooth flow of operation, resulting a good performance and profitability. We have discussed the commercial activity based on Islamic principle does not allow debt. In Islamic economics, any debt transaction or transactions that are secured by way of collateral is treated as trading of money and cannot be transacted under guaranteed form of return due to formation of riba. Debt base be settled when a person dies prior to paying off his outstanding debts, then the obligation to pay the debts rests on his family members or those close to him. As narrated by Abu Musa Ash'ari, Prophet Muhammad ﷺ said, after the major sins which must be avoided, the greatest sin is that someone dies in state of debt and leaves no asset to pay it off. Abu Qatada narrated that the Prophet Muhammad ﷺ said, if anyone would like Almighty God, Allah to save him from hardship on the day of judgment, he should give more time to his debtor who is short of money, or remit his debt altogether. Hoarding is an entitlement resulting from the economic activity. Almighty Allah has validated every blessing within which it is usable and important, but after the time is over, the blessing loses its purity. For example, the sugar that is hoarded for a high price loses capability with the passage of time. Almighty Allah has designed these seasons and commodities in accordance to the need of man and commodities, but it drops its importance with the departure of the season. Hoarding is an act that converts the commodity from feasible to reject. To force the human to consume rejected good is an act of murdering mankind. Oh, you believe, lo, many of the Jewish rabbis and Christian monks devour the wealth of mankind, went only the debar men from the way of Almighty Allah. They who hoard up gold and silver and spend it not in the way of Allah, unto them give tiding, O Muhammad, of a painful doom. Quran 9:34.